Hey everybody, Boris with BK Forex. Welcome to our weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar, November 5 to November 9, 2018. Story in the com dollars has been a big short covering rally. I mean, a surprisingly powerful move in Aussie, very powerful move in Kiwi, and CAD, of course, doing its own thing, not nearly actually as strong as both the Antipodeans. What's interesting is, we've actually bottomed out on Aussie Kiwi versus CAD a couple of weeks ago when things looked actually very strong for CAD because we had NAFTA, we had stronger BOC, and yet, ironically enough, as markets very often do, they pretty much priced out that whole move, and now we saw a massive reversal, mean reversion on those moves on the com dollar crosses. We'll take a look at the crosses on that section. But in the meantime, as far as the com dollars themselves go, the ranges have certainly moved up. Aussie now is a 71.73 trade. Kiwi is a 65.67 trade. The only one that sort of stayed the same in the range has been dollar CAD in the 130, 132 range because its performance has not been nearly as strong as the rise in the Aussie and the Kiwi. Now, the calendar next week does have a lot of commodity data. We have the services PMI out of Australia. We have the RBA cash rate decision. We have the New Zealand employment data, and then we have the RBNZ. Now, all of those are important, but they're really not important because the RBA, RBNZ expected very much to stay stationary. What's interesting, I think, is going to be to see if RBA or RBNZ actually make any kind of note on the slowdown in China, because that could weigh on both currencies in a sense that, economically, both countries have done quite well, irrespective of the fact that we've had a slowdown in Chinese demand. But if the central banks express a concern about that, that certainly will tilt the whole emphasis of monetary policy towards a more dovish posture. If they just simply repeat the same words, it actually, I think, would be net positive because the markets in some ways are almost conditioned to a dovish central banks out of New Zealand and out of Australia. The fact that we have two this week is kind of interesting because usually the RBNZ is only a quarterly statement. So it'll be interesting to see just sort of how both central banks read the region at this point and whether they see any serious problems on the horizon or whether there's just steady as she goes type of a message. Also, of course, the New Zealand employment data will be important just to see if that aspect of things is actually doing pretty well. Other than that, there's no more CAD data. We have CAD PMI, but honestly, there's just really no CAD data at all. And as you can see, it's a front of the week Aussie Kiwi type of a setup with very little follow-on as far as economic data goes. So now let's take a look at the charts. And the charts are kind of interesting because to me, they both follow, Aussie Kiwi follow the same script as Euro, which is big breakout candle, but a huge warning in this shooting star because this is a serious reversal candle, and it's hard to go up against this. I mean, you can buy this and hope that we completely overshadow it, and we take out the 7250s. But I would much rather wait and be proven right, have the 7250s get taken out, because then I think we are certainly have a little bit overhead at the 73s here, but if we can take out the 50s on a closing basis, I think the push through 73s is going to be stronger, and at that point the real resist becomes around the 74s. But until and unless we get that move, I wouldn't want to put my toe in the water on this particular trade to the long side. On the other hand, the shorts, the buying a dip story here does look relatively solid. In other words, if we start coming down towards the 71s, you have a lot of confidence here that this is truly, this ahead of the 70 is a strong support level. And only a ridiculously surprisingly dovish RBA would disrupt this particular structure to such an extent that 70 could become a threat. For now, despite the fact that we have slowdown in Asia, despite all those things, Aussie's holding bid. And interestingly enough, it's holding bid because U.S. rates are up, but not really running away. I think these currencies will begin to suffer or make fresh lows only if the 10-year can kind of climb and stay about 335, 345. Because at that point, the interest rate differential between US and Australian yields is going to be so large, the capital outflows could push us through the 70. Until that point, we are kind of making a very, very quiet consolidative move here. In the Aussie, same kind of a story. It's a mini-me story in the Kiwi. The Kiwi actually looks more bullish than the Aussie in that sense because we've bottomed out earlier and we're holding a higher low here, but still a little bit of a reversal here. If Kiwi, on the other hand, takes out 67, it's a very, very bullish signal. And I think at that point, you could say, oh, yeah, we've made at least an intermediate term bottom, and we could be moving much stronger towards the 68, 69s over the next couple of weeks. Now, CAD, its own story. It looks weak in a sense that the moving averages have crossed to the upside. We're essentially in an uptrend in dollar CAD, but we've been in this kind of very shallow uptrend several times, and this 32 level is a very serious resistance point. Now, this 32 level gets taken out. If we close above 32, I will completely change my tune, and I will agree that this is now a firm uptrend, and CAD is sort of secularly weak. But until and unless we get that point, it's really just another bump in a very, very narrow range. So it's really a 32 range to a 30 range, very, very hard to read. You could take a small dip here, for a move towards up to 32s with a 30 stop, but your guess is as good as mine at this point as far as the structure goes. It does look okay technically, but remember, it's kind of deceptive because it's a short slice of a trend against a much, much wider, much deeper overhead here at the 32s. But it's about 100 points towards that level, so it might be worth a punt just to see if you can take it to the long side. Personally, I would rather wait for the breakouts to the upside in the Kiwi or the Aussie to truly get long commodities as we go forward. That's how the week shapes up. We'll see what the RBA, RBNZ have to say, and we'll see if any of those are going to have any kind of material impact on currencies as we go forward. Wish you guys the best luck, the best trading. Boris Landsberg, over now.